morning call video for Thursday, May the 30th. We did get a down day, reversal from the previous day. Dow down 106 points, S&P down 11. Interesting developments, though, I must say, and I'm going to go through the charts. I have a lot of charts and some indicators I want to show you. Mentioned about bonds and how bond yields have continued to rise. I think Bernanke is going to be in trouble with bond yields continue to rise because he's driving bond yields down. And obviously the bondholders want their yields if they're taking on risk. And I think that the longer-term picture, I think bond yields are on the rise and they have bottomed. But again, that's going to be a little bit more down the road, a little bit more medium to longer term before that really affects Ben Bernanke and, of course, the market in itself. But it's definitely something of a concern and definitely we need to watch and keep an eye on. Last night we had the Nikkei down 5.15%. Nikkei, got crushed last night, and that's why is that a concern? Well, it does affect our markets, a risk-on, risk-off type thing. As you know, the Bank of Japan has been intervening their Japanese yen, devaluing their currency. Markets are now a lot of their money and economy, a lot of their money has been coming into the United States. So it's really gauges risk. It's a good indicator to look at. As you know, we are also forex trade, like to trade forex, and trading the yen pairs is exciting. But again, when you can't fight the intervention from the central banks devaluing their currency when you have these currency wars going on out here. So when you see the Nikkei down 5.15% and the yen rising, you have to wonder and say, hey, we may have another down day today. And that's also the case. We are getting a little bit oversold in the short term, so we could be due for some sort of a bounce. Key levels right now are going to be 1635. We did break the 1650. Remember I mentioned that. So we need to look at the 1635. That will be the line in the sand. If we do break that on a closing basis, I think that we're going to get a big flush to the downside. If we do not and we hold, I think we'll test that one more time, that higher level up above that 1680 range. I don't even think we get that far. I think we make a lower high from that 1680 high, and then we start and begin to roll over, which I would like to see. That would initiate shorts at a better area than obviously down in this area here, this lower 1635 area. Okay, so let's go into the charts. I want to show you some indicators, and as you can see here, we have our trusty NYMO, the McClellan oscillator, great gauge of overbought, oversold reading. And again, remember, overbought and oversold is not a buyer and or a sell signal. And right now we are in oversold territory, but we can remain oversold here. Remember, guys, we could flush all the way down to negative 90, and then I would say, hey, they would definitely due for some sort of a dead cat bounce like we had here in November. But this wasn't a dead cat bounce for sure. But again, we could touch 70, 80, bounce back up to the zero line, and then fail again. So depending on sentiment, depending on what the price is telling us on the charts, but I do see us getting close to some sort of at least a dead cat bounce. And that's why I say maybe we bounce. Futures are down actually small, about 2.5 handles as I'm recording this. So maybe we bounce a little bit lower to the lower end of the range, maybe take out that 1635, but then start to recover and then try to make that lower high. That's what I'm really looking for. Again, if we close below 1635, I think all bets are off to the upside for at least a week or so, and then we'll probably chop around and move lower. But again, we don't know that. We want to see what price and what the market tells us to do. Okay, so we have our NYMO. Now let me show you the tick. End of day tick reading. We're down at the 150, 200. I do think that we have a little bit more ways to go down to this area here. Once we get back below zero, we'll see. More than likely, if this thing does get to zero, the tick will probably move higher. And anytime the tick readings are above zero, that means it's bullish. Remember that, okay? We start breaking below zero, and now we start getting below 51, 150, and we stay below zero. That will give us a bearish trend in the tick reading. But right now, we are above zero, so any readings way above these areas here, if you wanted to fade, you could fade, as you can see here in these zero marks. But right now, we are getting to zero, and again, this is still bullish. Remember, this pullback, whatever little 2-3 day pullback we've had, really hasn't done much. We're still above the 20-day moving average on the 5 indices that we follow. So the important indices that we follow. So it's something to keep note of, and I'll go through that in a moment. Okay, so let's take a look at, speaking of the Nikkei, let's take a look at the Nikkei Tokyo Nikkei average end of day. NIKK. You can see here, now this doesn't include today, last night's price action. So we ended up being down pretty hard here. So we're probably down at this lower area here. So we'll see what happens if we take out the 50-day moving average. Like I said, then I think you're going to have some real problems in this index itself, as well as risk-off type mentality here in the equity markets. Okay, take a look at the SP. Stocks above the 50-day moving average. As you can see, we have rolled over, and that also put in a sell signal. Okay, now we're still up way above these areas. Before you even look to buy in these areas here, we would look to get down to these again above zero is bullish. So 12, 21, anywhere in this area here would look to some sort of a bounce. But right now we haven't got that in this indicator. Now we take a look at the the S&P above the 200-day moving average. We did get a sell signal in that as well. So we're getting sell signals approaching. They're coming on. I looked at the weekly NASI and the New York Summation Index. The weekly New York is still on a buy signal, barely, and the NASDAQ actually entered a sell signal. So we'll see what happens at the end of the week. We still have 2 more days of price action, so I didn't want to show that to you today. All right, so let's take a look at our bonds. Remember, let's take a look at the dollar first. Dollar did get a little bit of weakness, came right back in here, as you can see here. So as you can see, we had weakness in equities. We're getting weakness in the dollar. So I wouldn't say the relationship has changed now that it's following equities. I still think it's inversely correlated, at least for now. But we'll have to we need more evidence to see if this is going to happen, because it does make sense, right? If money's coming from Japan and other countries into our country, they need to buy U.S. dollars, and that's why the dollars pop up when equities pop up. Now, it has been inversely correlated, right? Risk off dollar, they go into flight to quality and flight to safety to the U.S. dollar. We'll just see. Right now, it's still a little bit too early to tell. Now, let's take a look at the bonds. I mentioned bonds, and I said it's very important to keep an eye on bonds. And we had, this is a weekly chart of the 30-year, and as you can see here, we are still on a sell signal right now. We broke down hard. Now, that's all well and good, and that's why I still say that we probably will get one more push up before we start to fail. Now, bonds here, remember, money comes out of bonds, it goes into equity, so this is actually good for equities, okay? But if you look at the 10-year yield, I opened this chart up because I wanted to show you how we have a bottoming process here, and you could even have an inverted head and shoulders, left shoulder, head, right shoulder, and we are breaking the neckline. Now, we did sell off just ever so slightly. We closed, I think, down 2 cents. So we're still at 2.13% in the yield. So that's something that you really want to pay attention to. Again, I don't think it's a big factor, but if it starts to really start taking out of these little peaks here, that 240 area, 2.4%, and it starts to really rise, I think Ben Bernanke is going to get really, really nervous, because he's been having that printing press going on 24 hours a day since 2008, 9. So I would really watch this. This is important, okay? Not for trading itself during the day, but if anything, I like to watch the 10-year during the day and see if we're selling off, or if we're starting to take out some resistance area, because that's going to also be a factor intraday as well. So something to think about, while you're trading intraday. Okay, guys, let's take a look at the charts. Right, wanted to tell you, as you can see here, no technical damage. We're still above the 20-day moving average. Again, here's the big number, 1635 in the cash. 1635 in the SPX is what I'm going to be looking for, a break and close below. Because if we do break and close below, the next real spot is going to be 1600, which would coincide nicely with the 50-day moving average. Okay. Now, we did have this trend line here. Let me just get right there. Okay, so we do have a trend line, and which coincides pretty much with the 50-day moving average. So 1600 would be the next really key support area, your pivotal support in the SPX. So keep an eye on that. 1635 on a break is going to probably get us down to the 50-day moving average. Again, and this is on a closing basis. Remember that. Okay, now this is also the spiders. Want to show you again, we had no technical damage. We're still hanging above the 20-day moving average. Remember, we popped back up, and then we're breaking back down again, and we did have an outside day from the previous day. So a lot of volatility is telling me that we may be in for some sort of a tradable top. Okay, we still need confirmation. Break below that 1635 would probably tell us that we have at least a short-term tradable top. Here's the 30-minute, show you that little uptrend that we've been in. We broke down with Ben Bernanke's speech FOMC last Wednesday, and again, you see the volatility. But the volatility has picked up in the indexes, but the stocks really haven't been doing much. We broke down, we gapped lower, and that was really the low, and then we just kind of slowly drifted higher. We gapped up, and then slowly drifted lower, and then we just kind of really chopped around here all day yesterday. So a little nerve-wracking. To have a little bit of volatility come in, and now, last week was a good week. This last couple of days have been kind of quiet here. Okay, and diamond, same thing, above the 20-day moving average. You can see where I'm going with this. No technical damage yet here. Buyers at dips are still out in full force, holding this market up. And we have the transports. This is the weakest of the bunch. This is our main leader. So this is something we really want to watch here at 112.25. Break below that will really put us down to the 50-day moving average, and then we'll have to reevaluate and see if we really come test these lows again here. But we did have a nice big move up, and now the transports are showing a little bit of divergence from the other indices. Here's the Russell 2000, the IWM, again secondary to our leader, but again above the 20-day moving average. So that's holding up pretty well. Good gauge of risk, so that's fine. So far so good. So I really don't see anything that I would be worried about if I was a bull. However, there are some things as far as our indicators that, again, they're lagging the price. Remember that. So we could get a little bit of a pullback. I'm looking for that. I would like to see a little bit of a pop up, and then obviously a rollover. And then we can get a little pullback, and then you can start looking to buy dips again. All right. Well, we know the banks benefit from higher yields. That's why Goldman is up, and a lot of the banks are up, and the ETFs are up. As you can see, the XLF held in really well. A lot of the interest-sensitive sectors, such as the REITs, real estate trust, utilities, they've been battered. Home builders have been getting hit. And again, higher yields, that affects the different sectors. So if you wanted to play them short, if you're a short seller, you could be looking for weakness, the weakest stocks in those sectors to play, and look for some shorting opportunities. So that's another way of doing it. You have a catalyst, higher yield. So you can monitor yields, and if the TNX starts to rise, continue to rise, look for certain stocks in those sectors that you can be shorting. All right, so that's another way of doing it as well. Looking for trade ideas. Apple, actually, I tell you, I'm surprised, holding up really well. Again, there's really no announcement coming until the end of the summer. So I keep saying that this is really just a trading stock. I would not be accumulating stocks, this stock anyway, at these areas. I think Apple at least comes down to these lows up in here, maybe 400, and then start to nibble in here. We do have an inverted head and shoulders. We also have a head and shoulders pattern. So we still have two patterns here. I'm less likely to get excited about the head and shoulders pattern, especially at a bottoming, when a stock is at a bottom area here in these areas. So this is less likely to work, although it doesn't mean that it can't work. Remember that, okay? But we do have a nice inverted head and shoulders, and holding up really well. And really, if you look at the symmetry in this left shoulder, it's really looking quite well here, as you can see. Really lining up well with the left shoulder. So something to think about. Here's our head, and here's the left shoulder head and right shoulder. Neckline does come in at the 470 area. So we really need to take that out. We'll probably get a good flush to the 500, then we would reevaluate it. Okay. But anyway, like I said, looking better to the long side for a trade. And lastly is the Qs. Same thing, holding in okay. Some technology, bigger cap tech, Amazon, Google, LinkedIn, really taking it on the chin lately. But again, it's to be expected. They've had some massive moves to the upside. A little profit taking is good for those stocks. Okay, all right, guys, that's really about it. Hope you get something out of this. I will see you tomorrow. Remember, be safe, use your stops, and expect the unexpected, because really anything can happen. Especially now, we're getting a little bit of pickup in volatility, which is exciting to trade. All right, have a great day. We'll talk to you tomorrow. Take care.